Hi, I'm David O'Connor with eXp Realty,
And I'm Alex Blancarn with eXp Realty.
and today we're going to be going through the roller coaster of what is the 2022 real estate market stats, and then we're also going to talk a little bit about the recession, potential recession, and also our predictions for the market in 2023. Well, we teased this one. We were doing the monthly stats, but we thought it would be a good idea to do, hey, let's do the crazy 2022 year in review. So let's
Yeah.
jump right into it.
Yeah, so let's hop into it. Like Dave said there, we're going to talk about the whole year in review this time, not just specific months, but yeah, it was a wild ride. I mean, when you say it was a roller coaster, we'll show people the stats, but I mean, we peaked at 801 in March. Just let that sink in. 801,000 for a residential home in Peterborough.
So that's a detached residential in Peterborough, right?
Yeah, that's absolutely nuts. Yeah, freehold residential. That's nuts.
What's nice to
So
see is we've gone through the materials, but we know it's been a roller coaster, but you definitely see it in these numbers here.
yeah, it's great to see. It's great to see the statistics actually back it up, because boots on the ground. You've seen this year. I've seen 40 offers on a property, and then I've seen a property sell for $110,000 under list
That's what I was just
after
telling
sitting
someone.
on the market.
Yeah, it's the
It's
same
nuts.
property. It's a property that in February would get 20 plus offers is now sitting on the market for 30 days.
Yeah,
That's
it's
in the
crazy.
same year. So
It's crazy. It's crazy. So yeah, let's dive into these market stats. Yeah, so average price here. I mean, we saw an increase, which is a little bit telling, of 10.37% year over year. And again, this is just an average for the whole year. It's not really necessarily indicative of what's happening in the market right now. But this is average price for the year went up 10%. New listings increased by about 7%, 6.79%. Number of sales declined 26.74%. That's a decline year over year. And days to sell increased 50%, which is a little bit crazy. Definitely the later half of the year took a bit of the weight on that one. Any thoughts on that, Dave?
wow, they're really all over the place because these are two different markets. I kind of zone in on the decline there of number of sales of 26.7. So I think that's what drove the prices up in the first quarter and the first even 4 or 5 months of the year. And if you look at that 10% increase year over year, but I think at the peak we were up almost 40% at one point. Prices had
Yeah.
gone up in 3 or 4 months, and then we declined 30 to 35%. So when the dust settles, like comparing to the previous year, it's 10%. We're within 2022. We saw real highs and now real lows. So we're definitely being all over the board this year.
Yeah, absolutely. Absolutely. It's like me trying to play darts here. So we saw the average sale price. You can see a little bit of a graph here. So an uptick for sure. We went from around just over 600,000 to at around 700. So let's dive into the actual numbers here. So there you have it. We're at 698 for 2022 and 632.5 for 2021.
And where it gets a little wacky is when we get into the months here.
Yeah, so look at those months. Nuts, right? So you can see there, like I was saying, 801 in March. And then we go all the way down to 575 was the lowest in November. What's interesting there is you see an actual upswing there between November and December, which is what we kind of talked about last podcast. But yeah, any thoughts on that, Dave?
Well, I'm just really interested to see the January numbers. I'm guessing we're going to be a slight decline, but nothing notable is what I'm guessing. But those first reports are going to be huge, and of course, the spring market I think is going to be really big this year. I think spring market is going to tell us what kind of year we're going to have. So I'm kind of eager to get into the spring market and see what happens.
I agree. And like we can see it kind of in this data here, but when does the spring market typically hit? Like when do you
It's
start to see things
yeah,
pick up?
it can vary. Sometimes for the waterfront, if you have an early spring and you get the nice weather, the waterfront market can kick off in February. Um, I'd say I've seen it since I've been in the biz. I've seen it usually mid March, right? I always
Mid-March.
tell my sellers you want to be part of the first wave of the spring market if you're having a traditional spring market, because you want to be kind of first to market before the inventory gets oversaturated in your typical. I'd say sometime in the middle of March, but as we saw last year coming out of the gates, market picked up in January, and
Yeah,
then
we were hot last year.
and
That
then
we
by
were hot.
April we were already seeing declines. So it was kind of went the other way. So
Yeah.
I'd say if we're in for a traditional year, which I don't think we're probably going to be, you could see the activity really start by starting in late February, but as we by mid March, we'll probably have a good sense of what's coming our way.
Yeah, I'd agree with that for sure. Here we have the new listings. So, eyeballs are telling me maybe about 1550 for 2021, and then a little bit over 16 for new listings for 2022. So there we have it. Eyeballs didn't lie. We had 1546 for 2021 and 1651 for 2022 in terms of new listings.
That seems about right. Seeing those numbers, that seemed about right. The one that really surprised me is coming up in a second here, but is the amount of sales.
Yeah,
I
yeah.
was surprised. So as we well here first, I guess you got your month over month for your new listings here.
Yeah, so month over month, like look at those December and January numbers. What's interesting is comparing those numbers to the average price that we just saw, right? So we saw a lot of maybe February, March, April, May, June sellers. Like look at those increases. So what are you seeing there? Maybe you're seeing your neighbor sell for an insane price and going, I want to capitalize on that. And you're listing, 2, 3, 4 months after they did. And that's what we really see with those increase in listings there.
Yeah, I saw a lot of this year. A lot of sellers were kind of late to the dance. They kind of came in. They saw those record highs in February going into March, and the people who start hitting the market in April, May, we're seeing already at that point, market had dropped 10, almost 15% in some sub markets, and then you see
Yeah.
that going into the summer. Now, traditional summers, there's a bit of a lull. I call it usually July, August. There's a lull, but I thought, as you can see in here, the listings were still fairly high, and I still think it was some of that um, residuals from that crazy spring we had, and sellers hoping they could still cash in, but most of them didn't.
Yeah, absolutely. Number of sales. Yeah, this is the big one here. Look at that drop. Look at that drop
Yeah,
year over year. And you see it here, like almost 400 sales dropped. Like we went 1335 in 2021 and 978 in 2022. So less than 1,000. That's a pretty big change year over year.
as I said, this was the one when we went through these. This was the one that really surprised me because of the crazy first four months we had of 2022 and all the activity. It felt like it was a busier year for sales than it was, but then the drop off, and then of course how slow the market's been the last 5 months or so. So I guess thinking about it, it does make sense, but it just felt like we had more sales this year, just based on how we came out of the gates pretty hot in 2022.
Yeah, and we can see that here with the month over month data. You see, look at that. Like you're peaking in March, 44 sales in January, but you're peaking in March, and you see that with the average price as well, which peaked in March. But then you see a huge drop off. Like look at those September, October, November, December numbers. Like
Yes,
a huge drop off, and that's really what we're seeing pull those number of sales down year over year.
and no fall market. If you look,
No,
it's
no.
just never really happened this year.
Yeah. And then you've got days to sell, right? This was another one that was a huge change year over year. And you can see it with the graph there. But look, we went from 12 days to sell all the way up to 18, which is, I think they said around a 50% increase year over year.
This next slide coming up, I think if anything explains the year we had, it could be this one.
Like, look at that. Look at February, a week to sell your home. You threw your home up on the market. Yeah, I mean, we did see the price low with a hold. That was pretty typical in the February, March market, which explains again the average price. But you threw it up maybe, $100,000 under market value, and you held offers for a week, and it sold. That was really the narrative in February. And then you zoom all the way down to the fall market, and we're at 29, 28, 27, 29, 37 days to sell in December. Like, what's going on? Like, what's going on? Dave, what are your thoughts on that?
It's the tale of two markets. As we've been talking about, we came out the gates hot, but the thing that's staggering about those single digit numbers you see in January, February, March, April is if they weren't holding for a week, these would be selling in 1 or 2, 3 days. So
Absolutely.
they were holding, to create to do your marketing to give buyers the opportunity to come see the property, and then a lot of these properties were receiving double digit offers, and yeah, and then as you see, stuff was still kind of moving as we got further into the spring market and early summer, but then yeah, just slowed right down there.
Absolutely. Yeah, absolutely. And then you see that really with the months of inventory. Like, look how low it is in 2021. You can see it there, the first half of the graph. And then look how it just picks up after the spring of 22.
And again, and that's the amount of inventory available on the market. As you can see, there wasn't much in the beginning, a lot of bidding wars, stuff selling record highs, and then as you get later into the year, just more buyers than so more inventory than buyers, and it goes the other way.
Yeah, and what we see, just for reference here, months of inventory is a statistic that helps us kind of determine what type of market we're in. So anything really lower than 3 months of inventory is considered a seller's market. Anything above is a balanced market, normally 3 to 5, 3 to 6 months of inventory. And then you've got your buyer's market is anything above 6. And what this is it's a ratio between the number and really the activity of sales and the number of new listings. So it really measures supply and demand. What it takes is the rate of sales, and divides it by the new listings and the activity on the market. So what did we see month over month with these changes here, Dave?
Well, as you can see, we're in a very heavy seller's market for the first half of the year, according to the
Absolutely.
stats. And then we talked about this the last few podcasts. With the exception of where it looks like in November there, we dipped into a more balanced market briefly. We're still technically, according to this stat, we're still technically in a seller's market, but we're not seeing that out there. Tune into the last podcast where we get into it a little bit more in detail. But the short version is buyers have been waiting on the sidelines, and there's a lot of different reasons for that. The rate hikes, we kind of talked about what people are hearing on the news, and people are a little scared to enter the market.
Absolutely. Yeah, absolutely. And here's kind of this is neat. So what I wanted to do here was kind of pull up 2021 versus 2022. So you can see October, November, December of 21. We're at, below 1 for months of inventory. Now, this doesn't take into account decimals. So when it says 0 months of inventory, that doesn't mean we have no inventory on the market. What it means is that anything that gets listed is getting scooped up like that. That's what it means. So what's neat is you can really look at the correlation here between months of inventory and the average sale price. If we're looking, early 2022, we see a heavy seller's market, like you just mentioned. And then we scroll down to November, where we saw the lowest price in terms of average price, and we see 3 months of inventory. So it's neat to see the contrast between months of inventory and the average sale price, and really how the type of market determines what type of activity and what type of prices we might expect to see.
Definitely.
So now let's talk about the Grinch who stole Christmas here. For those that don't know, this is Tiff Macklem. He's kind of the spokesperson for the Bank of Canada. And the reason that I say he stole Christmas is we'll scroll on to the next slide here and you'll kind of see what the Bank of Canada did and how he stole Christmas this year. So yeah, as you can see here, folks, like we were at a 0.25% interest rate for a long time. You can see it for since September 8th of 21. And then the Bank of Canada came and they released a 0.25% interest rate increase in March of 22. Now, where I see an issue with this is Tiff Macklem in 2020 actually came on air and publicly said that they were going to keep rates low for the future. And the reason that this is an issue is because, I mean, nobody could have predicted what happened with COVID-19 and how the economy was going to respond to that. So you can't really blame the guy for coming out and saying that. The problem is it may have influenced people to take a variable rate mortgage because the Bank of Canada's interest rates impact the variable rate mortgage. The fixed rate mortgage is impacted by Canadian bond yields. So when we see the interest rate increases come up, it's really only impacting those variable rates. It's not impacting your fixed rate directly.
Oh yeah, that's a huge point because I didn't realize that he influenced the market in that way because the buyers in January, February, March here, if you look at the chart that came in, they're like, oh, I'm gonna ride the variable rate, and if it's fixed variable and they're locked in with no option, then they're in for a ride already, as you can see.
And speaking of that ride, there was a statistic that came out that said 60% of Canadians opted for a variable rate in January 2022, which is absolutely huge when you look at what happened for the year of 2022. We went up 4%. So what does that mean for your monthly payment if you stuck with that variable rate and rode it out through the year? Well, I did a bit of math and just roughly speaking here, if you had a $2,000 monthly payment for your mortgage and the average variable rate interest rate in 2022 of January, when those 60% of Canadians would have hopped on to the variable rate, was around 1.5%. So when we increase that by 400 basis points, like we saw here from the Bank of Canada, it turns your $2,000 monthly payment to a $3,000 monthly payment.
Yeah, and then
roughly
you add
speaking.
inflation and increased costs for living, for groceries and everything. That's a hit.
Yeah, that's a Christmas stealer for sure. That's stealing your Christmas. So, I mean, I remember the difference there between June and July. I remember that 1% interest rate increase because it was absolutely absurd. I believe historically, this is the fastest the Bank of Canada has ever increased the interest rates ever in the history of the Bank of Canada. So this is huge. It was a huge year, and you see that in the impact on the average price, not only in Canada, but in Peterborough as well.
This is a great chart you put together here.
Yeah, so let's talk about this a bit. I mean, the StreamYard logo is cutting it off there, but it's saying in March we saw 0.25% increase in interest rates. And this is just going over how the average price in Peterborough was impacted by these interest rates. So you see 801 in March, then we drop down to 721 in April. That may have been in effect from that increase in interest rates, the 0.25. And then Tiff goes, okay, let's do another 0.5%. So we do another 0.5% in April. And what's interesting is we see the average price actually increase in Peterborough between April and May, but then it takes another big hit and drops down from 721 to 655 in June. And then in June, Tiff goes, okay, let's do another 0.5 point. So we do another 0.5 point. We drop down to about $11,000 month over month. And then Tiff says, okay, let's do another 1%. And it drops again about $33,000 by September, another 0.75%. This one's neat. We went up.
Yeah.
We went up about $30,000 in Peterborough between September and October, despite what just happened with all of those increases. So, yeah, a bit strange there.
I would guess. I would guess that we thought we were going to have a fall market.
Yeah,
And
yeah.
it kind of started, but then reality sunk in, I think.
Yeah, and you see maybe some more activity in the fall because of that. And then, of course, we had the next two interest rate increases. The one in December was a pretty big one. I did not expect a half a point. I was expecting a quarter point, to tell you the truth. So that one was a bit of a shocker. But yeah, you can just see how the price got hammered down with every single interest rate increase. So this one's kind of neat. We're looking at sales versus new listings because this is really a measure of, or could be a measure of supply and demand and what's happening in the market. So if we take, that lens and look at this data with that lens, we see the blue bar as a signifier of demand. So the blue bar is the number of sales for the month. And then supply would be the green bar, which is the number of new listings. So you can really see the difference between the level of supply and demand in June.
Yeah.
Look at that difference. Like, huge. You've almost got half as much demand as there is supply, maybe more than half as much. So really, we did see that in the average price. It continued to fall based on really the amount of supply versus the amount of demand. And then you look at December, right? So we saw that uptick in December. Well, look at the supply and demand levels.
But I think the only thing this doesn't capture is it's not capturing the days on market.
That's right.
Even though it looks like that's even, but in December there, the green and the blue, but you've got property sitting on the market for almost 40 days. So there was actually more supply, but this is just talking about what new listings came to December versus sales. But it's not.
Yeah, that's a great point.
All the properties that are sitting. So if that was somehow to be incorporated in this, that green would just be a lot higher if it was available properties versus sales.
Yeah, that's a great point. That's a great point. If it was active listings instead of new listings. Yeah. So let's kind of compare and see what's going on year over year. So again, we've got the same thing. Green's new listing, blue is number of sales. And then you've kind of got that first graph there as 2021, and then the second set of bars as 2022, just to show you the difference year over year. So you can really see, just based on this picture, the difference between supply and demand over the years. I mean, it really sticks out in June.
Yeah, it definitely looks like more closer to a balanced market in 2021 there.
Yeah, absolutely. Absolutely. Yeah, it looks like pretty much anything that was listed, we saw maybe 40 new listings for the month and maybe 35 sales kind of thing. That seems to be the average trend maybe for every single month in 2021 there. And we saw that change drastically in 2022, especially as you get into the end of spring and the start of summer there. So, I mean, here's going to be... this is going to be a tough one here. Let's start with the 2023. So what are your predictions for 2023, Dave?
Yeah, I'd like to do a little disclaimer. I don't want anyone doing any investments based on this specific information they're about to get. There's a lot of different ways this could go. The way I see this year playing out is you'll see prices trend down for the next couple of months still. Bank of Canada is meeting, the 25th?
That's right.
Maybe another quarter point. I don't see it being a big one at this point. So then prices will trend down for a few months. We'll have a spring market. Not an aggressive one, but I think the buyers will come back. And then temporarily we might have even some bidding wars, maybe March, April, maybe into May. But I really see it balancing out by the summertime. And I see prices going down again later in the year. So we're going to trend down a little bit for the first few months. You might see prices go up throughout the spring market or the months just after as closing dates and whatnot. But then by the end of the year, I see things trending back down again. And so the good news is I think we'll have a bit of a spring market. And I guess the other good news is, I not to tease the next one, I don't see us spinning into a big recession either. So
Yeah. Yeah, so I would have to agree with you. I mean, I've got my crystal ball right over here to the right of me, and I'm looking in that, and there's a number of factors. Again, please do not interpret this as investment advice. This is really us speculating. Who knows what's going to happen in the market? Nobody does. So there's a couple of points I wanted to touch on. There were two reports that came out. One was from RBC. The other one was from Royal LePage, the real estate brokerage in Canada. And what they said was, we're going to see the biggest discrepancy between prices in Q1 of 2023. So what does that mean? Well, they're saying that when you compare Q1 of 2022 to Q1 of 2023, it's going to be a huge difference. It's going to be a huge decline, which is not outrageous to say when you think about where we're at right now versus where we were at in Q1 of 2022 when the average price was 801 in March. Like, obviously, it's going to be lower than that. But what's interesting is what they say after that is that we'll start to see it flatten out, which is very, very interesting. So what they basically did was they predicted and called a bottom of beginning in Q1 of 2023. So they're saying the bottom of the market's going to be Q1 2023, and then they're expecting it to flatten out. Now, is there any merit to this? Well, if you ask me, they don't know any better than we know. They're just kind of calling the shots here. But what we've learned from the past, past 2 quarters of 2022 is that the news heavily influences what buyers will do. So if a bunch of news comes out that says, okay, the bottom of the market is going to be March of 2023, that's going to be the lowest price. Will we see a bunch of buyers come to the playing field in that bottom of the market? And if it is the bottom of the market, all of those buyers that are coming to the playing field now, will that cause prices to increase? And you touched on it a little bit, and I would have to agree. Every single buyer I seem to be talking to says, I want to wait till spring. I want to wait till spring. So I do think we're going to see a big spring market.
And I think what's going to happen, though, is the inventory is not going to be there. And one of the big reasons is the fringe sellers. So people who are like on the sideline, should I sell now or not? They're going to see those low prices, and they're going to step back for a little while. And I think we'll see a drop in inventory. We'll see the buyers come back. And then we could have a couple of months of prices going up, bidding wars again, at least temporarily, before it maybe flattens out by summertime.
Absolutely, yeah. I mean, well, let's see what happens, but I would have to agree. I think we are going to see, a lot of buyers come to the surface in spring. I mean, I certainly hope so for the state of the market. But yeah, let's touch on now maybe the stickier topic there, which is recession. I think we've been talking about a recession in the news for 6 or 7 months now, and as we touched on a little bit last podcast, recession technically is 2 negative quarters of GDP. So we haven't had 2 negative quarters yet, but we don't have the Q4 data for 2022 yet. So that hasn't come out yet. So we don't know if it's going to be a negative quarter in Q4 of 2022. I believe that comes out sometime in February. But every single time the GDP has been reported for 2022 so far, it's come in, I believe, above the expectation. So what do you see happening in 2023 recession-wise? Is there going to be one? Are we going to have a soft landing? Are we going to escape and not technically have one? Or are we already in one right now?
Yeah, again, we did touch on this. There's some that say we are. If you look at inflation, cost of living, we could be, it's hard times for a lot of people right now.
Like you touched on, job numbers. So the last statistic for job numbers came out in December, and we saw 110,000 new jobs in Canada. So the reason this is significant is what happens in a recession. Well, typically you see a lot of layoffs, and then people cannot afford goods, and there's a lot of pain in the economy. So what are we seeing jobs wise? Well, we're seeing a lot of people are still able to get jobs. I know they're, like you mentioned, the tech stocks. I mean, today is January 20th, Friday. I was listening to the news and there was a huge layoff at Google. I believe there was another layoff earlier this week for Amazon. So the tech industry is definitely seeing some of that pain, especially in these bigger companies, Google and Amazon, huge companies in the world. So what's interesting about these job statistics is Jerome Powell, who is the leader of the central bank for the states, has come out publicly and said, until, I mean, I'm rephrasing here, but until we start to see some problems in the job market, I'm going to continue to increase interest rates. The reason this is significant is because TIF kind of goes hand in hand with what happens in the States. So will the Bank of Canada say, okay, we're still having, a lot of job activity in terms of new jobs in Canada, so I've got no problem increasing interest rates? Who knows? Let's see what happens. I mean, we got to wait till the 25th. I think everyone's going to be on their edge of their seat. But what's important in terms of a recession is what the Bank of Canada does. I mean, we've been seeing a lot of pain, like you said, whether everyone I talk to, whether you go to the gas pump, whether you go to the grocery store, or whether you have to pay for housing, there's a lot of pain right now. So maybe it doesn't reflect that in the GDP numbers, but I do think that pain will continue. I do think that pain will continue until we start to see that in the data. Who knows what the news will say, but I do think the pain will continue, and it's unfortunate for the everyday Joe. It's really unfortunate.
Maybe we'll see a nice little decrease just in time for Christmas so they can make up for this year.
Yeah, maybe they'll give us a little Christmas present. So, I mean, I really bounced around a lot there, but I do honestly think there will be a recession. I do think it's kind of unavoidable. I know everybody's talking about it, but I do think we might see, Q2, Q3, Q1, we might see some negative GDP. So we'll see. I mean, for Q4 of 2022, the expectation, I believe, was 0.2 for the GDP. So we're getting really close to those negative numbers. I think we're at 0.7 or 0.8 from Q3 of 2022 in terms of GDP. So we're getting really close to those negative numbers. If we do start to see one negative number, will we see another negative number following that? I do think we will, just because of the market's reaction to that first negative number. So, absolutely.
I was thinking maybe we like to do our little bets. I thought a good one might
be
what we think from January, even though the January numbers aren't out yet. But the average detached home, so we saw a peak, remember, last year at 801, and we're sitting around what 580 right now.
Yeah, 580. I think 583. Yeah.
So what you believe the increase or decrease percentage-wise will be between January and December of 2023? What are your thoughts?
I think we're going to see a decrease. I don't think it's going to be a big decrease, but from what I'm seeing on the MLS every day, I do think we're going to see a decrease. I think there's been a decrease in activity. So I think we're going to drop 3 to 4%. I don't think it's going to be a big drop, but I do think we're going to see a decline for sure. What about you?
You're just a bummer today with the recession and your 3 or 4%. I'm going to be a little bit more optimistic.
All right.
I believe we're in for a little bit of a roller coaster, not like 2022, but I think when the dust settles, I think the average sales price between January and December will be very comparable, almost net neutral by the end of the year. So I believe we're going to go down. We're going to go up in the spring, maybe balance for a bit, maybe trend down. But I think when the dust settles from December or January to December 2023, it'll be net neutral. That's my prediction.
That would be pretty all right.
We could do a year in review next year, and maybe even show clips and see how.
Yeah, we can see how wrong we are. I mean, I've still got to eat those donuts. So I'll have to come over to the O'Connor residence, and we can have a bit of a feast.
Yeah, we'd love to have you here. We didn't talk about this, but I did have a little tip I was going to throw out.
Yeah.
I think there could be, this is for investors, there could be a really good opportunity in 2023 on pre-construction. Now, just quickly, I grabbed a stat. You're the stat guy, but I grabbed one stat, and this is specific to Toronto, and it's not going to be the same. But in Toronto in 2023, there's 30,000 condos scheduled to close, and there's a good percentage of them, right, that were people that buyers that never intended on closing. They want to assign the sale, so assignment sale. But a lot of them cannot afford it. And what has happened is, since they purchased it, they're hoping, prices trend up. The buyer who buys an assignment sale is always looking for, a discount. But what do you do when property values just went down 10, 15, 20% from when you purchase? So what that's going to equal, you can't afford it. You can't close. You don't want to be like sued or go bankrupt. So you have to sell this property before it closes. So there's going to be an opportunity for buyers to swoop in and get kind of that assignment sale discount. And that's not just in Toronto. I grabbed that condo stat because it's staggering. There's 30,000 condos, but I think townhouses, residential, I think even in and around Peterborough and Durham area, there's going to be some opportunity for the savvy buyer to maybe swoop in and get an assignment sale. So that's my little tip for 2023.
Yeah, that's a great tip. I'd have to agree. I've heard a lot of stories similar to, that's kind of what the fear is those 30,000 condos and the buyers not being able to close on them.
Or someone that I feel bad for the people just dipping their toe. They're like, I always hear real estate's safe. So they put money down on a property they can't afford, and now prices have decreased, and they're in for a big loss. So again, kind of on a sour note for them, but an opportunity for some buyers.
Yeah. So, I mean, is 2023 the year of pain, or is it the year of pleasure? We'll have to see. I mean, it's tough to call.
A lot of people make money in these downturns, right? So
yeah.
But it's at other people's expense. So this has been a bummer of a podcast.
Yeah, it has been a bit of a bummer. It's been a bit of a bummer. Yeah,
I'm an optimist. Maybe when we do our January numbers, maybe we got some good news for people. I'll be coming out in a few weeks, so let's
I hope so.
Let's hang on.
Fingers crossed.
Let's end on that note. But
let's end on that note. Yeah, that's right.
So, Mr. Blankarn, just want to thank you again for putting that deck together, and appreciate you as always. And I'm gonna have to get you those donuts, and maybe for the next one, we'll see.
Yeah, we'll see. All right, thanks for your time, man. And sign off here. Hope you guys enjoyed that, and drop a subscribe and a like down below. It really helps out. And let us know if you ever have any questions or anything real estate related. You just want to talk markets or what's going on. Absolutely feel free to reach out. And until next time, guys, that's all, folks. See you later.